Hello, everybody. Joe Malone here, coming to you live. It's Thursday, and the Dow is up at record levels. Wow. We have moved into a confirmed uptrend from a market correction. So this is interesting. Now, it's interesting about this confirmed uptrend. What's happened is we have moved essentially to a situation where we're out of the correction, but we're in a confirmed uptrend. So now it's time to start getting back into the market. Um, if you were like me, I was out in cash mostly, and now I'm starting to wade back into the market. But interestingly enough, many of the names that led before in the Nasdaq aren't leading. It's many of the cyclical stocks that now are leading the market. There was a buy point on Boeing today, which I was able to take advantage of for the small portfolio. And so basically, what's happened is that the market isn't a confirmed uptrend. But it's mostly in the S&P and the Dow. I opened a position in what they call UPRO, which is the triple leveraged ETF on the S&P 500. It's doing pretty well. Also, I did buy one full position in the small portfolio of Boeing, and that seems to be working. Out. So, I've moved mostly out of tech stocks. I'm out of Tesla. I'm out of all these other stocks. I sold this about 3 weeks ago. So we're moving, but it's a little bit different of an environment than you're probably used to. Mostly tech light and more more stocks that are basically more cyclically oriented. There are some interesting plays in the airline stocks that I want to talk about. There's an ETF that we might want to look at called JET, J-E-T. That's the symbol for it. It's a airlines ETF, and as there's a lot of anticipation, of course, as the market opens up. Now it's time to start looking to buy some of the airlines. Before, I had been very down on the while we were going through this before we got the signal. I was a little bit down on the airline stocks. Now I'm kind of looking to build exposure there. One of the great ways to do it is with the broad ETF, JET. And I want to talk about that as well. In terms of the stock that I was talking about, Boeing. Boeing, as you can see, it's up. It moved above it moved above this level here, and basically it's right now at about 250, up $4.78, about 2%, which is very significant because this is the largest American exporter. So very significant here that Boeing is up as much as it is. Also wanted to show you the UPRO. Excuse me, not the UPRO, the Diamond. This is the ETF that tracks the Dow Jones, and the Dow Jones, of course, is only 30 stocks, but 30 of the largest, very industrial-oriented stocks in there. And then it's up significantly, 2.43%. Again, the Dow itself is hitting an all-time high, so that's kind of that's something to be interested in there. I want to show you the Nasdaq Composite. We're still, flirting with about that 13,500 line, but we are up today a little bit. So we are seeing some strength in the Nasdaq, but as you can see, it pulled much further down. It does appear to be on the mend, but remember with the Nasdaq Composite, it's a tremendous number of stocks, but basically it's the Nasdaq 100. Which is represented by the QQQ. That's really more of the action. There's only about 7 stocks that move most of the that move most of that in that index. Just want to talk about a very interesting stock. This is the stock of the day, and it might be of interest to you. Basically, it just moved above the buy point, the 147.07 buy point in heavy volume. It's a very interesting stock. It's a company called Regal Beloit. And what they do is they make kind of industrial motors and that kind of thing. They're sort of a infrastructure play. And I as the economy reopens, I think that this will be an interesting play. And the reason is because Amazon and many of the other big retailers, online retailers, have been building lots and lots of warehouse space in the United States, and this is these people here at Royal at RBC are a very big supplier of electric motors and that kind of thing too, to the warehouse industry. As we reopen, there's going to be more demand in the industrial space. So this is one that you might want to put on your radar, RBC. We may be above the buy point right now. It's basically up 223% in terms of that volume. So it's up a lot in the volume, up $3.98. Or about $5.71 total, 3.98%. So this is an interesting stock to look at. Earnings growth have accelerated, and so just maybe you want to take a look at this one on your radar screen. Just kind of wanted to show you what the margin debt looks like. The margin debt right now is creeping up to an all-time high, and this is kind of a worrisome indicator in my opinion, because this typically tends to flag when we're getting close to a potential reversal in the market. As you can see, the all-time high for debt, margin debt, happened way back in 2007. It signaled the beginning of the 2008 Lehman Brothers failure, and so this is an issue. And so even though we have moved back into a confirmed uptrend, we have to be a little bit careful because there is something on the horizon here, and that is growing margin debt. So if if the market falters, this could be an issue, causing rapid deceleration in the price of shares. Here's what I am currently holding. I'm in Ford. It's down a little bit today. Halliburton, as you know, Rent-A-Center. I really like Rent-A-Center. I don't know why. I think, it's kind of a boring business. You come to a new city, you get a apartment, and then you go to Rent-A-Center, and they have all the furniture and everything like that. You can just get it all at once. So it seems to be doing really well. Granite construction's down a little bit today. I think that with the reopening trade, we're going to see a lot of highway construction, and of course, Granite construction is big in that. They're based in Watsonville, California. I used to live near there, so it's very nice. Westlake Chemical, it's up strongly today, 1.56, or about a little over 1%, 1.6%, which is great. But the most important thing about this is the change in volume. So this WLK, Westlake Chemical, based in Houston, seems to be doing quite well. The Simply Foods, that was basically bought a position in that yesterday. SMPL, for some reason, this is doing well. It's up about 11%. It's down a little bit in this one, but it's just been doing quite well. Broke through a buy point. Also, as I said, I put on a position in UPRO. This is the triple leveraged ETF for the S&P 500. We seem to be doing better in S&P than in the other indexes. So that's why I have that on. And of course, I also opened a position in Boeing. It's up almost 2%, a little over 2%, which is amazing. But what's significant is it's up 112% in terms of volume. So we do see the market sort of moving away from some of the more growthy names that we had before, like like the tech stocks, into the more kind of what they would call real economy stocks. I think it's a misnomer, because anything is real economy. So I can't say that it is, but the more traditional type companies, that everybody's heard of, like like Boeing and those kind of companies. So without further ado, let's see if we can get into some of the questions. Thanks for holding, everybody. I hope everyone's well out there. So let's take the first question. Thank you. Let's look at Apple and Neo. Let's look at Apple first. That's really the one I think that we've been. I think it's sort of the bellwether for for the tech sector. So I'm going to pull up Apple here, and let's see what's happening with Apple. I'm out of Apple, by the way. I was in Apple up until really about the split on August 31st, and then I put out some videos on how I was playing the split. This is Apple right now, and basically it is pulled up, but it's still not in a buying range, unfortunately. Even though it's up $2.12, 14 cents today, it's still not buyable, because unfortunately it has still not broken its downtrend. The trend currently for Apple is downward, and it is not a time to buy it. As you can see, I've drawn the trend line here, and basically, as you can see, we're still moving down with Apple. Now, here's the thing: if we are able to move above this little green line here, and that's at about that's at about let's get the exact number there for you. For some reason, I am slow today. I keep complaining about the internet speed, but it is an issue. Okay, at about 125, I think that if we can see Apple firm up some more and move above 125, then I think it possibly is buyable. But even there, it's really early. I probably would not be not be buying this until it passed this alert. And I want to show you the alert here, and oops, I got to reactivate that alert. Let's kind of reactivate that alert, and that alert basically is let's edit that alert. There we go. Okay, I'm looking really, even though you could possibly do an early buy at about 125 on Apple, I don't think it's buyable really at these levels. I think it has to move at least above about 130. That's approximately where the 50-day moving average is. That's that red line here that I'm showing you here. So that's where I'd be looking at see it. But right now, you just can't buy this one. It's unfortunately right now, Apple, it's a watch list and not a buyable stock. It's buyable probably above about 130. But right now, it just isn't. It just isn't viable at the current levels. It needs to, it needs to move a little bit higher and possibly get some more support. But right now, I don't think you can buy Apple. And so here's what I would say. Watch list. AAPL possible entry of 130. So it's possible to it's possible above 130, but right now I think on Apple, what you've got to do is you've got to watch list this one. So that's what I would be doing with it right now. So I can't give a thumbs up, unfortunately, for Apple. Let's take a look at the next. Let's see. Let's take a look at NEO. NEO has pulled back quite a bit, and it's still it really is out of sync with the market right now, and that's probably what that's always what I'm trying to do. I'm always trying to buy the things that are in sync with the market. If the market is moving up in certain areas, that's where I kind of want to be in my market. It still is pulled back below levels that it basically almost bounced off the 200-day moving average. That's good. It's moved above the 10-day line, and it looks like it may be close to moving above the 21-day exponential. But I probably would not be interested in this one until it moves above the above this line here, which is the 50-day moving average. What I'm going to do is I'm going to reactivate an alert that I have on it. And basically, I think that you really have to look at, possibly above the 54.34 level is sort of where, is sort of where I think, it can be, you can possibly look to buy this again. But right now, the same kind of thing is happening with this as is happening with Apple. It's not ready to go. It's not really viable at this point. And so, you just, again, with NEO, I think you just have to watch list it. And, and there is a possible entry. There is a possible entry, above the 50-day line. But I wouldn't do anything on this one until it was past about 53.50. So that's where I would be looking to enter it if I was going to enter it. So right now, I think you got to watch it. You got to watch list, and it's not target. It's NEO. And so I would watch list NEO, and it's viable above the 50-day line. But again, you're going to have to wait on this one. So on both of those, I'm afraid to say that we're just not able to buy them. I mean, we just have to watch list them. Again, this is part of the movement in the market away from some of the names that we got so familiar with, the Chinese EV stocks like XPeng, NEO, those kind of stocks. They've pulled back a lot. The momentum now has been taken over by some of the domestic EV stocks. One I want to point out here is Ford. I'm in Ford currently, and I think that this might be a better bet. It's off a little bit today, but it has a much better chart and a much higher relative strength. So let me show you the chart for Ford. This might be an alternative. It has a rising, the correct buy point. It is a little extended currently. Ford is, the correct buy point was 1214. It's currently at 1280. But it's moving right up it's above the 10-day exponential. I want to kind of show you that right there. That's the that 10-day exponential line is basically, let me put this in there. Okay, there we go. That's basically where it is now, and this is the 10-day line. So I'm just drawing where the 10-day line is. Ford is basically, this is not a bad place to buy. This is not a bad place to buy Ford at this amount. It's pulling back a little bit, but it's still in the trend that it has made, and it's moving above the 10-day line. So that is not a bad trend to be buying it. Let's take a look at some of the statistics on it. The checklist is improving on Ford. It's now 77%. When I started with this stock, it was about, it was 60%. It was just barely that. And now it's gotten a lot better because it is improved. It does have some areas. It needs to improve its sales, of course, and the earnings per share. But other than that, you can see a lot of funds moving into it. There's now 1438 funds in it currently. So that's a lot. And the industry rank is 50 out of 197 different sectors. So that's, again, pretty good. So this is not a bad sector to be in, the automobile area, especially if they have exposure to EVs. But I think you have to be careful with some of the Chinese names, XPeng, Li Auto, and NEO. They've been good, but I think they've pulled back a little bit. They're getting ready. Stocks can't go up all the time. I think that it's sort of been a handoff to the GMs and the Fords of the world. Now, I know that it's super boring, possibly looking at buying a GM or a Ford, but right now that seems to be where the money is going from the bigger funds, and that's really what you've got to look at. So thank you very much for those questions. Appreciate it. Are we out of the woods? You should always be cautious. Always be cautious, because you never know what's going to happen. But we definitely have turned the corner. Now, here's the thing. We've turned the corner primarily on the two indexes. The Dow is hitting an all-time high. The other index, of course, is the S&P. The index that we kind of got to be careful about right now is the Nasdaq. So the QQQ is not going to perform as well as some of the other indexes. So I want to show you the QQQ. This is the ETF that tracks the value of the that tracks the value of the of the top 100 stocks in the Nasdaq, and it is pulling up, but it's still below. And this is key. It hasn't moved above this very key line. This is the 50-day moving average, and I really am more, when it moves above that 50-day average, then I think you're going to see more stuff come back into some of the names in this. There's many stocks that were leading here that are in the Nasdaq that are down more than, that are down more than 30%. I mean, a really good example of this is Apple. So we want to be careful in this in stocks that are currently in this in the Nasdaq 100. And the Nasdaq 100, this is represented by this ETF called the QQQ. So it's still time to be cautious. I would be favoring names that are more beaten down. I think the oil and gas sector is particularly good. And I did put out, by the way, for everybody that is out there on the action trade alerts, I did put a play out there on a kind of a weird little company called Transocean. It's not little, actually, it's huge. That is kind of like a oil service company, but for offshore oil rigs. It's a company called Transocean. I did a spread on that. Just kind of want to see how it's faring today. It's probably down a little bit, but hopefully I didn't. Hopefully I won't have to close this thing early. Well, it's pulled back. Yeah, it's definitely pulled back 10 cents. So, anyways, hopefully I can recover from that too. All right. So thank you very much. Hey, thanks for watching the show. I super appreciate it. All right. Hope you're doing good. Is this a reversal of the charts or showing something different? Yes. This is it's essentially what this is it seems that the charts are showing that we do have a we've broken the trend in terms of we've broken the trend in terms of some of the things here, and I want to kind of show you this. Now I'm going to show you this is the Nasdaq Composite chart, the chart for the Nasdaq, all the Nasdaq stocks out there, and it sort of follows. There we go, and it's come up, but it still is not healthy. It's still fallen below. It's still fallen below this trend line here. You see it. What happened is that it changed its trend, and then it fell, and then now it's moving back up. So until we get up to above 1400 on the Nasdaq, it's not fully safe to get into Nasdaq like stocks. Some of them are good, like Google, for instance, the Nasdaq, and it's doing well. But for the most part, we want to be careful because this was a break in trend, and it looks as if now, with this reversal here, and this is a reversal, by the way. Oops. Yeah, there we go. With this reversal, now we're starting to come higher, but we really need to come up to the channel here. This is the channel in order to get back to the kind of the way we were. So we're quite far away from that. We're quite far away from that. We need to be above. Possibly you could start moving back into some of the Nasdaq stocks soon as it moves above that line here, and basically the level on the Nasdaq Composite that that I'm talking about here. And let's see if I can put it on there. Oops, let's see. Yeah, here we go. Yeah, okay, is about 13,345. So right now the Nasdaq Composite is below that. It's 13. Well, it's actually right at that. It's 13,404. So right now the Nasdaq Composite is right. So it's right on the verge. Now we should see by next week, we should see hopefully the movement back into the Nasdaq. But right now we still have to be careful. And where we want to be looking for opportunities is probably in some of the more industrial type stocks. That's why Royal Beloit was the stock of the day. It's essentially an industrial play, and RBC is the symbol of that. That's because that is still where the money is moving. It's moving into more of the industrial type stocks, away from some of the techs, the big techs. So that's kind of the That's the way it is. All right. Thank you very much. Can you please look at NVTA and skills? Okay, I don't know both of those. Let's see. Hopefully I'm going to get my cursor back here. There we go. All right. So let's look at NVTA. NVTA. And that is interesting. Genetic testing. Okay, this is a classic example of, of stock that may be moving higher, and may have reversed off of the 200-day moving average. Now, hopefully, there we go. There we go. Let's see if there we go. Okay, this black line here. Hopefully, I don't know if you can see this. Let's see if I put the pin on it. There we go. That's the 200-day moving average. It's pulled above that. That's a good sign. It's still below the 50-day, so that's of concern. So here's the thing. We had, we had a cup with handle pattern on this, but it failed, unfortunately, and now it's coming back here. Now, where would I buy this? Let's first of all see if it's buyable, and let's look at the ownership in here. It's got 433 funds in it, so that's pretty good. The checklist, though, is a little bit concerning. It's only a 44. So here's what I would do. I think this is a watch list on this one. The industry rank is also very low at 132 out of 197. I typically like to be in the stocks that are in the top 20% of all the current sectors. There's 197 sectors. So I tend to like to be in the ones that are in the top. Right now, in terms of the rank, this is not a particularly good group, medical services. So here's what I would do with NVTA Corporation. I would watch this one. I don't think it's buyable right now. I think you got to be careful on this one. It's just not a good time necessarily to be in this one. So I would say watch list. This one. Don't buy now. All right, so that's kind of my take on this one. Is watch this one in VTA, but don't buy it. It's not in a good position, and I think you could do a lot better. So that's my take on that's my take on that one. So let's see if I can give you the next one. Yeah, let's look at SK. This is interesting. I don't know this particular one. Let's hopefully I'll get there. We go. SKLZ is the symbol on this one. So let's look at this one. SKLZ. All right, and hopefully we'll get something here in just a second. Yeah, goodness gracious. We are slow today. Yeah, there we go. Okay. Yeah, this one just has a bad trend as well. Operates a platform that, okay, well, this is mobile gaming, which has, been really good. I mean, I think that there are some standouts in this area, but right now, I can't get excited about it. The chart is not correct on the daily chart. Let's look at the weekly chart to see. Yeah, this just isn't a good one. Again, it's got an issue regarding see, that's the trend, and the trend is down. So remember, as they always say, the trend is your friend. So the trend is unhappy. So on this one, I think that you have to avoid a bad trend. So this one has a bad trend, and it's just not something you want to be involved with right now. It's not the kind of it's not the kind of stock you want. It's got the bad trend. It does have a high relative strength though, at 90. But I would be very careful with this one right now. I just don't think it's working. And that's what we like to do. We like to find stocks that are working. Let's go to TikTok to see. Just want to see if there's a question from TikTok I can answer here really quick. Good. All right. Well, they're interesting. Okay. Best Best Ollie 00 is looking for IDEX. So let's look at IDEX. And by the way, if you're watching on TikTok and you want to jump over and see the charts that I'm using, super easy to do. Just go to Dallas, www.youtube.com /Dallas Trading Floor, and we're broadcasting live on YouTube right now. So let's look at IDEX, DEEX, and that is IDEA. Okay, operates an operates an artificial intelligent and blockchain powered fintech. Interesting. Well, that's an interesting area. Definitely. It seems like it's a fairly low, it's fairly, sort of development stage company. We did have some very nice sales, up 234% in the last quarter. That's looking pretty good. And it actually does have some funds in it, 19. Wow. Okay, it's still, of course, losing money, but that's not surprising for a startup. And this looks to be a startup. Let's look at the monthly chart. Let's kind of look at the existence of this. Wow, it's just been all over the place. It's been around since 2012. That leads me to believe that they haven't gotten their mojo working. When I see companies like this, and this is always why I check the monthly chart, is that yes, it looks like it may be in an area, but a lot of times what they'll do is they'll start in something, it doesn't take, so they roll it over into something else. This is a little bit troublesome for me. It kind of seems like they don't have conviction in what they're doing. So here's the thing: it's got earnings basically in 26 days. It won't obviously make any earnings because it's losing money currently. Boy, I just thought, it's below the 40-day line. It's got a relative strength of 98, but that's not enough. I would say avoid it. I think you want to avoid this one too. It's it's not a good stock. It's too cheap. Sorry to be so negative. I don't want to be a Debbie Downer here, but yeah, you want to avoid it. I think that I don't think it's going to give you. I don't think it's going to give you the results that you want. There's so many better fish in the ocean than this one. So IDEX, I would avoid it. I would really avoid IDEX, at least for right now. All right. So drunk Squidward. I like that. Thoughts on UL? I wonder if this is. I wonder what UL is. UL used to be Underwriters Laboratory, but I don't think it is anymore. So let's see if I can see that symbol, UL. Let's just look. Unilever. Okay, well, it doesn't get bigger than Unilever, at least if you're in the soap business, I think. Wow. Very unexciting company, but this is definitely the kind of thing that, does well in a reopening. It's got a relative strength of 7, though. I don't really like that. And it is below the 21-day exponential. Let's pull up the chart here and show everybody. So let's look at the weekly. First of all, when we're analyzing a stock, what I always do is I always go to the weekly chart first. And I want to see kind of what the overall trend is. This has been pretty unexciting. It's made its peak at about 60, and now it's below that. It seems like there's some buying coming in, and it looks like they did have an event here. But do I really want a sub company and a sub company with 44%? I think this is a big no. I think Unilever, it's 100. The sector that it's in, which is the food packaged area, its performance is 162 out of 197. So here's the thing: I like to pick winners, and in this sector it's a great company. Unilever is going to be around forever. They make Dial soap. I washed with that this morning. So there you go. I know about this company. It's a great company, but I don't think it's a great stock. I think you just need to go. It's not going to have. It's not going to give you the results that you want. I don't think so. I think you got to be super careful when it comes to that. What about Chewy? Chewy. It's funny. Back in the day, when I lived in Silicon Valley, a little bit of story here. I worked for a company called it's called Spa.com. And Spa.com was basically kind of very similar to a company called Pets.com, which, of course, was a very big failure. it spent all of its entire monies on one commercial on the Super Bowl, and then promptly went out of business. So I don't know why I went that, but being in the pet area might be good, because look at Chewy, it's chewing it up. So that's not a bad thing. A lot of people have pets because they don't have children. I totally understand that. And it looks as if, it's up $1.34 today. Its performance is really good. 91 on the relative strength. That's looking good. And the checklist is at my minimum of 66. So I do like that. Let's look at the industry. Well, if the industry is fallen a lot, it's basically, they have it in the retail restaurant business. And I don't particularly like this. Oh, I'm sorry. Chewy's Holdings. Excuse me. I have eaten there. I've eaten a lot of places. You can just take one look at me and know that. But I don't like the restaurant business very much. I think it's very competitive, and I think the margins are very low. I think you've got to be really good. But by the way, Chewy's is really good Tex-Mex. I have eaten there, so I do like it. And that's CUHY, but I don't know if that's Chewy's restaurant or if it's Chewy. Here's the thing: if you could, Drunk Squidward, if you could send me the symbol for Chewy, I think it's Chewy Incorporated, not Chewy's restaurant. So, anyways, took a big dip. Well, that's no surprise. Restaurants have not fared well during this period. So if you're down more than 7% on this one, blow it. Get out of it, because the house is on fire. So you don't want that. You don't want that. Remember, here's what I recommend for everyone. If you get in a position, it's sometimes I'm wrong. At least I'm probably wrong a lot more than I'm right. But one of the things I do is I try to limit my losses. So when I get into a position, I always immediately set a stop loss at 7%. Now, then I'll adjust that stop loss either up or down, depending. But I always want to get in there, put that stop loss in. So in case, when I do something like walk to the other side of the room, I'll be sold out if the thing just, goes on fire and just dives, So I always do that. So remember, try always to keep your losses at about 7%. I don't do it all the time too, and I've been doing this for a long time. So it's hard, but you want to set that stop loss at 7% from your entry point. So if you enter a stock, set that stop loss, because you can always buy a stock back, but it's hard to make it's hard to make the money on the way up. So that's the kind of thing that you want to be very careful about, because the upward motion is what you want to maximize, and the downward motion, of course, is what you want to eliminate as much as possible. You can't eliminate it all, but that's why you want to do the stop loss. Let's look at MGM. Now, this should do well on the reopening. And of course, this is MGM. This is the big, it used to, I remember, God, I'm old enough to remember when this was actually a film company, but now it's really a big operator of resorts in Las Vegas, Viva Las Vegas. So there you go. It's up $2.01 today. So let's kind of look to see, this probably will do fairly well once the economy reopens, because people are just sick of sitting around. And, a lot of people want to get out and, go to Vegas and lose some money and have a good time. I might be going there too. You never know. So I can see this being a pretty good area, actually. It's got a 66 checklist. Let's look at the industry. It's a 40, so that's pretty good. Leisure gaming equipment. This is not a bad area. I do think that there's some better options in this area besides MGM, and I think the one that you really have to look at is Penn National Gaming. Now, the interesting thing about Penn, PENN is the symbol on this one, is that along with DraftKings, these guys are really a leader in online gambling, and I do think that's going to be huge. I mean, I don't think it takes a genius to figure that out. That online gambling is likely to be very, very big deal. So now, hopefully, I can get this chart up here in a second. Hopefully that'll let me do that. I'm still having these boundaries issues. I have to talk to the landlord here to see why I'm having so many issues when it comes to that. So let's just see if I can just type it in. That'll give us Penn National. There we go. Penn National Gaming. All right, I like this one a little better than I like MGM. It's up $22 today as opposed to the laggard of MGM. It's got a relative strength of 97. Can you buy at this level? Well, unfortunately, the last pivot, the last buy point on this one, on stage 2 consolidation, was 76.62, and that was unfortunately the last time really that we had to buy. I probably would wait for this to pull back, but I think this one is on fire. Penn National Gaming, and it's got an excellent checklist, 77. The ownership in this is very, very good. You've got Fidelity Contrafund in here. This is sort of like one of the best funds out there, and they have money in it. So, I'm always interested in looking at least in gambling stocks, well, and other stocks too, who has the money on the table, and I like to take those side bets. And if you're looking at side bets, Penn National still looks pretty darn good. It's got 719 funds that are in it. And remember, what really typically moves the stock isn't individual little investors like us. It's basically the big funds that are in the stock and are putting money to work there. And so Penn National, here's the thing with MGM and Penn National, I think you got to go with Penn National. Now, is there a great buy point on this one? Well, unfortunately not. The best place to have bought it, of course, would have been at the when it tested the 50-day line, and of course that was that was last week, but of course, and I didn't do that. I just stuck out. I stuck out of the market because I was Mr. Ostrich. I was pulling my head in because we were in a downturn, and we did move, by the way, to a confirmed uptrend today. So that's very important. But it's an odd follow through because it's not been equal. The Dow stocks and the Dow stocks as well as the S&P 500 stocks are doing well. The Nasdaq stocks, not so much. They're not that they're losing anymore, but they're just not participating as much in the gain. So that's definitely something to look at. Now let's look at space. This is Virgin Galactic. I've made money on space before. This is kind of a more of a day trader stock. I could they don't really have a product, but space tourism, which is going to be a big thing, is there's really no way to play it, and the only way to play it, of course, is with Virgin Galactic. And so they have stock that's been all over the place. I actually sold out of this in the first quarter of last year. Well, actually, it was the second quarter of last year, basically right before earnings, and I sold it out in the 40s. It's pulled above that, but now it's pulled below that. It's up $6.30 today, almost 23%, which is incredible. It basically, what happened is that it moved, like everything else, it moved down and it touched that 200-day line, and boom, it went right back up. Where is it buyable? Wow, this is a tough one to buy, but there is a buy point on this one, and it's a cup base 35.84. Here's what I would do. Let's see when the earnings are. The earnings are on the 5th. Now, they're not going to have any earnings, obviously, but the interesting thing about the announcement on 5/5, I would play this thing into the earnings, but I wouldn't pay it through the earnings. And what they're going to talk about is how close they are to viability. They're not going to talk about earnings because there could be no earnings. But if you wanted to play this one, and I'm probably not going to play this one this time, but I would be interested in it at the buy point of 35.82 and above. So here's how my strategy would work for space. I would basically possibly buy above the buy point at 27 57.55. Okay, so are we no, let's see where the new buy point. No, 35.82. Excuse me, that's wrong. At 35.82 and hold no longer than 5/5/2021. So that's sort of how I would play it. I mean, I think there is a possible buy on Virgin Galactic, and basically the buy is right basically at and above this secondary buy point here. Okay, if it goes above that, currently it's very close to that. So I definitely think you could buy it at this level. It's very speculative, but I would hold it only till 5/5, actually 5/4. I'd sell it on 5/4. And why would I do that? Well, I think here's the thing about these stocks, they're very anticipatory. They come in, they move up, and then boom, the earnings happens, boop, it goes down, it pulls up again, then earnings happen, boop, it goes down. So that's the that's been the trend here, is every time we come into earnings, we accelerate, and then when we find out how far away they are from sending somebody into space, then it goes down. So what I would do, I would wait until we move possibly past the buy point at 35.82, and then I would hold it no longer than May 5th. So that's sort of my take on that's sort of my take on it, how I would be doing it. It's giving me some feedback here. That's weird. Okay, I don't know why I'm getting feedback. Oh, that's weird. Okay. So maybe maybe I just have a speaker. I don't think I have a speaker on. Wow. Okay. Well, for some reason, there we go. Okay. Hopefully I'm not getting getting a little feedback there. Yeah, that's weird. Okay. So maybe I can put that down a little bit. Hopefully. Yeah, okay. I think I got rid of that feedback problem. Had a little feedback loop going there. Weird. Yeah, weird how that works. All right, let's look at a question from TikTok. And by the way, if you're listening in on TikTok and you want to see the actual show live, it's available on YouTube, youtube.com/Del's Trading Floor. And just jump over there and you'll see the charts that I'm actually looking at. I'm kind of analyzing the charts, and I really appreciate everybody looking in on today. So let's take a look at the next question. This is going to come not from YouTube, not from TikTok, but from YouTube. So let's take a look at the next question. All right. So here's a question from Will. Thank you very much. CCL got in at 18. Let's look at CCL. This is Cleveland Cliffs. CCL. This one should do very well. Oh, no, I'm sorry, Carnival. Oh, okay. Very cool. Okay. Well, you're doing good. Good. I was not one who was advising on this, but it has moved above a buy point. So what would I do here? Wow. Well, it's working. It's working. So I would just keep it working. I would just keep it working. I mean, you're in on a very nice first stage cup with a pivot at 24. So you were in way early, but below the buy point. So you know what? I would stay in right now, and I would set my stop loss at 24. But I think all you really have to do, this is I just set and forget. Are you up? Let's see. Are you up 20% on that? Yeah, you are. You might want to consider. Let's just take a quick look to see kind of where you're at, and hopefully I'll get my cursor back here. There we go. All right. So what I'm gonna do is I'm going to switch over to the calculator so you can see my calculation. Just wanted to show you that. So let me go to the calculator here. And so here's what I would do on okay. Here's what I would do on Carnival Cruise. You say you got in at 18, so let's put 18 in there, and then let's divide it. Oops, come on, baby. It's not being very cooperative. And divide that by what the current price is, 27.34. 43, excuse me. A little dyslexic there. Okay, so that's 66%. So it's moved up. It's moved up 34%. So that's fantastic. And so here's what I would consider doing. Here's what I would consider doing on that. The fact that it's moved up that significantly. What I would do is I would probably reduce half of my position. I would take half of my position and sell it, and then I would just ride on the rest of the money. So that's what I would do. You're up very, very nicely. And I don't know how many weeks that is, but typically my rule of thumb is if you're up more than 20%, you possibly want to take half off, and then take half off, and then let the other ride. Work with the house's money a little bit. That's the way to go on it. So that's what I would advise. But you just done great on Carnival Cruise, and this is one that I was very skeptical on. I'll be honest with you, I was very skeptical. I didn't buy Carnival Cruise, but I think you've done great. So that's what I would do. That's what I would do. All right, so Real Madrid has a question on Fastly. Let's put that up. There we go. And Fastly has, it's funny. I was in Fastly right before when it was moving very, very quickly. Right before the, but then it lost TikTok as a customer, and it just dove, and I hadn't been really in it since. So let's see if I can get Fastly to come up here. I'm having a little bit of a freeze. There we go. A little bit of a freeze on my screen here. So here we go with Fastly for Real Madrid. Thank you very much. And basically, it's pulled back. It's still below the 200-day line. Here's my concern on that. I don't typically like to buy anything below the 200-day line, even though it does have a relative strength of 84, which is strong, and it's pulling up. Here's the thing: I would wait on this one. I definitely think they have a great product, and they have a great service, and I think that good things are in store for them. But the thing is with Fastly right now, FSLY, I do believe I don't like buying anything below the 200-day moving average, and currently we are. We're basically right at the, that's the 200-day moving average. We're significantly below that. So here's what I'm going to do. I'm going to set an alert basically at this level to see when it moves above the 200-day moving average. When it moves above the 200-day moving average, then I think you could consider it. But right now, I think it's just not performing well enough. But it's still, and the checklist is not really that stellar. It's only 55% on the William O'Neill checklist. This is one I typically like to use the most for growth stocks. And it's over 15% away from its all-time high. I typically like to buy stocks that are within 15% of their all-time high. It did have it had good earnings. It had good sales growth, but it was down from the last quarter. It's still very, very fast-moving stock, but it is not quite so. So here's the thing: I think you really got to watch this one and wait for another opportunity. And I think the opportunity on this one is really above the is above the 200 days. So I would watch list this stock and wait for movement of the 200-day line at, I'm going to give you an exact number on that. Hopefully I'll have a cursor that I can do that with. Oh, goodness gracious. We're still, I think you probably have the audio, but the video is not doing the greatest. Okay, 85.36. So that's where the 200-day line is 85.36. So let me get the cursor back and put that in there. There we go. So here's what I would do with Fastly here. I think you've got to wait on it until it moves above this very key level, which is the 200-day moving average, and that's right here. That's right here. So currently we're below the 200-day moving average, and we need to move above it. So this is a classic watch list stock, and you just don't want to buy it right now. But if you're in it and you have a nice profit cushion, definitely don't sell it. But right now, I think you just got to be a little bit careful with a stock like Fastly, because it's just it's below the 200-day line. We don't know that if it'll move above that, and that's so key. So we want to hold it on and wait for it to move above that 200-day moving average. All right, question on VLDR. Let's take a look at that chart. VLDR, and that, okay, well, what would happen if I got the right, VLDR. There we go. Wow, San Jose, okay, autonomous vehicles, okay, I like the area. And after hours, it's up. Interesting. Well, this one, this is a fairly thinly traded stock. It's very, it's definitely funds are 7%. That's a little bit light. I did lose money, so it definitely is a startup. It's not, it did have a buy point on a cut base of 24.35, but that was way back. So let's kind of look. I want to look at the monthly chart. I want to look at the history of this thing. Wow. Okay. So it's been around since 2018. That's interesting. And it's pulled up, and then it's pulled right back down with a relative strength of 3. Wow. You know what? This might be something interesting in the future, but I can't get behind it. It's only got a checklist of 44. There are 92 funds in it, and the industry is pretty good, 37 out of 197. So that's pretty good. It's a pretty good sector. Here's the thing. I just don't think, this could be very big, because I do think that, one of the great market opportunities of our time, of course, is electric vehicles. And of course, the real reason for electric vehicles has nothing to do with the environment, in my opinion. It has to do with autonomous driving. And I think that is indeed the biggest thing that is out there. So it's in a very, very good area. I just wouldn't buy it right now. It's a component supplier. It's part of the value chain, but I think you got to watch this one. I wouldn't be a buyer right now. I know it's got a story, but it's been around for a while, and it's just got to be careful on this one. All right, let's look at HCO. Now I'm in HCO, by the way, but I'm in it through a spread. So let's look at HCO. This is an interesting company. This is a boat manufacturer. Can you believe it? There's 2 companies that are big in this field. This is a recreational boat field. One of them is this one, Marine Max, which is HZO, and the other one is Brunswick. Remember the bowling company? Well, they're in boats now, and it's Brunswick. So very, very nice. Look at this. It's moved up very nice. It moved up about 5% today. And again, I have, for everybody that was on the action trade alerts, I did put out an action trade alert on this one on a spread that I did on this one. And I did a little video on it that showed it. It's performing extremely well. I just think, unfortunately, this doesn't really give us a great place to get in. That's the main problem here, but it's got a 100% checklist. This is the kind of stock you ought to be buying in the reopening. That's a 100% checklist. At least for right now, it's just doing great. 429 funds in it. Very, very good. It's a little bit low in the rank. It's a 99 out. It's a leisure product, retail leisure product, which that is not as good as like some of the oil and gas sectors, but definitely not a bad, not bad. It's up. The overall sector today is up 1.7%. So that's pretty exciting. Here's what I would do on this one. I don't know if I can say I don't. It's just I would like. I think people would be a good one to buy, but I just think it's too far extended right now. So I want to see this thing reverse down and possibly reverse off of possibly the 21-day line. What do I mean by that? Well, what I mean by that is that, as you can see, stocks don't go up straight. They kind of go up and then down and then up and then down, right? Like that. And they move in a channel. Okay. They move in a channel. I'm just kind of sort of drawing a channel here. So right now we're at the top of a channel. Now, this thing is going to reverse and it's going to move lower. And then hopefully it's going to bounce right about there at $50. So here's what I would do. I would wait on this one until it reverses lower. It's going to probably pull down to about 50 or so. And then it's going to reverse higher again because it's in this beautiful channel right now. So I do expect it to kind of move a tad lower probably over the next week. But it's going to give us an opportunity because it's going to probably pull down to right about 50 or so. And when it gets there, that's where I want to buy it. So here's the thing. I'm going to set an alert, and hopefully that will work. Yeah, it will. That's a line. I want to set that alert, and but I do think it's an excellent stock, and it's definitely, where you want to do it. By the way, if you do buy this now, and I wouldn't recommend it, I would wait for it to pull back, and then bounce and then pull back higher. I would set my stop loss right about at this 40-day line. That's this red line that you can see here. I don't know if you can see that. Yeah, there it is. That's where I would set my stop loss. Very, very good company, Tiander. Thanks for that. Again, I had a bull put spread. What do I call it? Bull put spread on this one. It's doing great, and HCO is a good one. Let's look at MARA. Take a look at that real quick, and that's Marathon Digital Holdings, and it's kind of like what I call this is a digital troll company. They basically have, I think, yeah, okay, no, they mine cryptocurrencies. Okay, well, I don't think this is necessarily bad, but I'm not as jazzed on this one. It does have a good checklist though, 77. Wow, that is looking pretty decent, and its group is up. Finance, it's up about 0.7 today. Here's the thing: instead of this one, I think I would recommend the GBTC, because I do think that at least going forward with the potential of this new bill, I do think that we're going to see some nice movement in the GBTC. So as you can see, take a look at the chart. We topped out here at about 58.20. We then came right down to the 50-day line, and now we're moving above the 50-day, the 21-day, and the 10-day. So this is not a bad place to buy Grayscale Bitcoin Trust, and I would recommend this one over MARA. And I know there's very kind of different things. This Grayscale Bitcoin owns about 4% of the world's Bitcoin, so it's a significant amount of Bitcoin that they have. I wish I had that much Bitcoin. I would be a lot richer. Well, we have come to the end of the hour, and man, thank you so very much for watching. So appreciate it. If you're not already on the Action Trade Alerts, it's very easy to do. All you have to do is go over to the site, and come on. Just go over to the site. And of course, for the free Action Trade Alerts, it's www.Dallas Trading Floor. And just need first and last name and an email address for everyone. And it's super easy. All you have to do is go over there. And of course, you can unsubscribe anytime you like. I just basically put it out there for everyone. And I do show some of the trades that I'm making and how you might be able to benefit from them. So, and it's free. And that's a great thing to do. Also, if you are on TikTok, super easy to also get this. Just go to the profile of my account. And you will see a thing called beacons, and it's a little link thing. And if you scroll down, you'll see a place to put in to get on the mailing list, to get on the subscription, first and last name, and of course an email address, and also an SMS would be great to get in on that. And so that is free as well. So till tomorrow at 2:30. Thanks everybody for taking a look and with me today. And I will see you tomorrow. Happy trading and happy me back, and then